In this module, we will cover the regulatory agencies related to screening. Role of regulatory agencies. Federal and state governments have a myriad of agencies in place that regulate and oversee financial markets and companies. These agencies each have a specific range of duties and responsibilities that enable them to act independently of each other, while they work to accomplish similar objectives. Regulatory bodies are established by governments or other organizations to oversee the functioning and fairness of financial markets and the firms that engage in financial activity. The goal of regulation is to prevent and investigate fraud, financial irregularities, and money laundering. It keeps markets efficient and transparent and makes sure customers and clients are treated fairly and honestly. In this module, we will learn about various regulatory bodies and their functioning in the financial sector across countries. FINRA, SEC, Fed, FinCEN, OCC, IRS, U.S. Treasury, SEBI, BaFin, RBI. FINRA. FINRA stands for the Financial Industry Regulatory Authority. It enables investors and firms to participate in the market with confidence by safeguarding its integrity. It is a not-for-profit organization that oversees U.S. broker-dealers, working under the supervision of the SEC, which actively engages with and provides essential tools for investors, member firms, and policymakers. FINRA oversees more than 624,000 brokers across the country and analyzes billions of daily market events. SEC. SEC stands for U.S. Securities and Exchange Commission and is a U.S. regulatory body. The primary mission of the SEC is to protect investors and maintain the integrity of the securities market, both formal exchanges and over-the-counter OTC. The SEC, a federal government agency, which was created decades ago with the Securities Exchange Act of 1934, regulates and oversees FINRA, which was created in 2007. Fed. Fed stands for Federal Reserve System. The Fed is the central bank of the United States. It was created by Congress to provide the nation with a safer, more flexible, and more stable monetary and financial system. FinCEN. FinCEN stands for Financial Crimes Enforcement Network. It is a bureau of the United States Department of the Treasury that collects and analyzes information about financial transactions in order to combat domestic and international money laundering, terrorist financing, and other financial crimes. OCC. OCC stands for Office of the Comptroller of the Currency. The OCC ensures that national banks and federal savings associations operate in a safe and sound manner, provide fair access to financial services, treat customers fairly, and comply with applicable laws and regulations. IRS. IRS stands for Internal Revenue Service, which is the revenue service of the United States federal government, responsible for collecting taxes and administering the Internal Revenue Code, the main body of the federal statutory tax law. U.S. Treasury. The U.S. Department of the Treasury's mission is to maintain a strong economy and create economic and job opportunities. By promoting the conditions that enable economic growth and stability at home and abroad, and strengthen national security. by combating threats, protecting the integrity of the financial system, and managing the U.S. government's finances and resources effectively. SEBI. SEBI stands for Securities and Exchange Board of India, which was established on April 12, 1988, and given statutory powers on January 30, 1992, through the SEBI Act, 1992. Its aim is to protect the interests of investors in securities, to promote the development of and regulate the securities market, and for matters connected therewith or incidental thereto. BaFin. BaFin stands for Federal Financial Supervisory Authority. BaFin is the financial regulatory authority for Germany. It is an independent federal institution with headquarters in Bonn and Frankfurt and falls under the supervision of the Federal Ministry of Finance. Its primary objective is to ensure the proper functioning, stability, and integrity of the German financial system. Bank customers, insurance policyholders, and investors ought to be able to trust the financial system. RBI. RBI stands for Reserve Bank of India, which is India's central bank and regulatory body under the jurisdiction of the Ministry of Finance, Government of India. It is responsible for the issue and supply of the Indian rupee and the regulation of the Indian banking system. Screening. Name matching mechanism. The matching mechanism is the process of comparing two data sets in order to either identify the exact or potential match. There are four types of name matching mechanisms: direct match or exact match, partial match, fuzzy matching, and phonetic matching. Direct match or exact match. For example, David Carlos, customer or employee name, versus David Carlos, sanction target from SDN or OFAC list. This could be a true match, provided other information like date of birth, images, family details, etc. are the same apart from name match for both customer and sanction target individuals. Partial match, probabilistic. For example, James Peter Johnson, customer or employee name, versus James P. Johnson, sanction target. This could be a true match, provided the initial P in the sanction name refers to Peter. Fuzzy matching, probabilistic. For example, Robert Pappas, customer or employee name, versus Bob Pappas, sanction target. This could be a true match, as Bob is the nickname or also known as for Robert. Few more examples: Carl for Charles, Dan for Daniel, Betty for Elizabeth, etc. Phonetic matching, probabilistic. For example, Michelle Carlson, customer or employee name, versus Michael Carlson, sanction target. This could be a true match, provided other personal or professional details are common for them. Through this module, we have covered regulatory agencies related to screening and the name matching mechanism under screening.